Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we'll look at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature, looking at the last print of 1455.50, just a stone's throw away from an all-time high on this 5th day of October 2012. And what's interesting about the market is we've just now reclaimed the upper echelon of the 1440 to 1460 support resistance band. We had actually mentioned to our clients recently that this band, with the recent and market sell-off, market that is with a D, sell-off down to around the 1826 fib level, fib 618, fib 50, was pretty impressive. And thus the 1450, 1460 area would be on resistance, and that's exactly what we've seen. Not only have we retested the recent highs, but we're certainly at the upper echelon, again, aforementioned the band from 1440 to 1460. So we do expect, the bad news for the bulls is we do expect, even though we're officially and fully bullish on the market and do anticipate a retest of the highs to 1500 to 1600, possibly even by year's end. Won't that be exciting? This, of course, is a presidential election year cycle, and we do expect the bullishness to continue. Now, of course, 2013 will be likely a totally different scenario, but that, of course, is again where the MiniAnalyst.com comes in. Is to hedge. I mean, if the market's going lower, you're not going to be making money on the other 60 to 80% of your portfolio that's invested in stocks and what other markets, and that's where we come in to hedge on the downside, particularly just like we did in '08, where we had fantastic hedges, made 4, 5, 6, 700% on our clients' money as they were losing substantial monies in their longer-term investments. And of course, the great news for everyone, all of us that are invested in the market, about 50% of the U.S. population that are invested in the market is, again, within a stone's throw of the all-time highs. Again, we do expect to test that, but in the near term, in the short term, this, of course, October, September, we're going to have these traditional fall sell-offs, and it's likely to be a little delayed. If we don't get that, it'll be even more bullish for a move to retest the old highs of 1600. I believe the Dow's already at new term highs. So that's pretty impressive. The small caps have been selling off a little bit, as you can see, but let's look at a quick chart of the market. And these are our intraday dynamics, what we use to gauge where the market is likely to head. And as you can see, most of the time this week, this of course Friday, Thursday, Wednesday, Tuesday, Monday, most of the time the market actually began the week pretty impressively higher. And as you can see, overall it's been pretty green. Green is bullish for the bulls' favor. Green, 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 green. Even with these little sell-offs, we've had some just minor, I mean, you can see the positive divergences here. Smaller low there, or higher low there, higher low there, and of course we get a market that blasts to the upper echelon, again, to the aforementioned 1440 to 1460 level in the ES contract, which is primarily one of our favorite contracts to trade, given that it is fairly liquid, well, extremely liquid. And of course we do also trade the Russell, the Mini Dow, and the Mini Midcap S&P 400 as well. But as you can see, on an intraday basis, the market is pretty strong. But again, as mentioned, let's go ahead and switch over. We'll move down to that to the daily chart, and as you can see, we have this level of resistance right here. This is the 1440 to 1460 band of support resistance right here. We made a high today of around 0. So we made a high today of 1466 even, and the recent high was 1468. So again, the 1440 to 1460 level, once we had the sell-off to retest the this was the key fib marker. We can go ahead and put that in there actually, and this will be our key fib marker. Right there was the retest. So once we got the retest, we expected that we would move higher and retest, but this band was now, of course, given this high with the close below the low of the high day, was in place. We expected a retest of the high. That's exactly what we've gotten. But of course, the band is now on resistance duty until we break out to new highs. And of course, we do and have remained officially bullish on the market from around 1350 down here on the 6th day of July. And so for our free market timing, a free official market timing, you of course are another 100 points. Those of you who have been following these videos for years another 100 points in the green, just timing your IRAs or your personal stock spiders trading, or even trading longer term futures. The market timing has been a valuable free offering that we've provided really since inception, almost a decade ago. And of course, we're looking here, a bit of a negative divergence. You see an equal high, and in terms of momentum, we've got a lower high. So there's a slight negative momentum divergence. Directional movement picking back up again. We've got a short-term bullish, intermediate-term bullish as well. All bull all the time is the trend bias, and of course, price technicals. We're going to need to see a new high. So it's a pretty overwhelming bullish picture. If we do break below 1400 to 1420, it's going to be kind of interesting where the market goes from there. We could certainly test 1360 again, but overall we do remain fully and officially bullish. The 1400 number really shaping up to be kind of an interesting 1380 to 1400. Really shaping up to be an interesting band of support resistance if we do continue to get some kind of choppy movement. Again, we've yet to have the September, October fall downdraft. Granted, it's an election year cycle, but we've yet to have a downdraft. If we don't get it, could be particularly bullish in the short term, might be potentially more bearish in the longer term. We're going to wait and see how things stack up. But in the meantime, we can go ahead and take a look at the we need to bring the market, we need to bring some of our portfolios here, and I'm not sure where they are. Here we go. And hold on one second. Hope that didn't go to the, we'll just take that there and see if we can't. Okay. Alright, here we go. Let's see if we can't bring the, so we've got our numbers updated, and of course here's your story. So here's the website, MiniAnalyst.com, and as you can see, what's interesting is we do provide the free intraday market analysis. We do provide the free daily market analysis and the free official market timing by which you can gauge and trade on your longer term investments. But of course, what we actually offer, how we make our money and turn make you money, is through our portfolios, and those are the Aurelius portfolio, the Valerius portfolio, and the MSAUDT portfolio. Those are pretty much the most popular portfolios in general. And of course the Valerius, I believe at last check, I would have to pull that up again. I believe at last check Valerius was, let's see if we can find that. And I'm not sure. Boy, we're just having all kind of issues today with delays. I do apologize for that on the video. But right now we're looking at, let's go ahead and just take a look at Aurelius while we're coming up with those. Here's the Aurelius portfolio, and as you can see, the portfolio has been updated. These are actual portfolio returns for Aurelius, 50K through the month of September. Another $7,000 last month. Not too bad. So a $50,000 portfolio, $7,000 last month, $8,600, almost $9,000 in August, $6,000 in July, almost $20,000 in June, a $6,000 drawdown, $13,000 in April, March, $13,000. It just keeps going on and on. We did have that pretty nasty drawdown in the financial crisis, so the crisis du jour of the year. We have about once every 1 to 2 years. But there is the portfolio over the last, so over the rolling 12 months from 9/30 to 9/30, you're looking at basically 50,000 to, that's $75,000 in profit. So essentially, this is arguably the last 20 months, last 12 months, 140% net return. Even though we had essentially a scratch, 50,000 back down to 50,000 within the first 6 months or so, during which the time that we did have that crisis. Not even sure which crisis that was. But it was the 2011 crisis. You guys can write in and I'm sure tell me quickly. Late in the week, late in the day, and just ready to wrap things up. So we're going on slow time, but there you go, 76% for the $100,000 more conservative version. You're only going to have about a 20% drawdown there for Aurelius. And of course, you can trade Aurelius, and you can trade Aurelius, and maybe we can get that over here. And we can take a look at Valerius. So here's Valerius. Too bad, $50,000 account in 11 months to almost double. So that is the Valerius portfolio. And we're looking at Aurelius right now. So Aurelius will cost you $1,500 a month. Not too bad. Valerius, $400 a month. And you just looked at that. You just saw Valerius in real time. This was last month or so. But there's the equity cover of Valerius. Pretty impressive if you want to get started with that. Then, of course, we'll take a quick look at the MSAUDT portfolio. That's the one that's been the hot-so. And that's why it's just pays so much to be diversified. That's why we have so many elite trading models. Is that developed over the last decade. Innovation, constant improvement, Kaizen. But there's MSAUDT, of course, that was leading in the old batch, the old guard of portfolios before Strategy Runner went away, was MSAUDT, and that, of course, this is actually kind of a version 2, but it led the way MSAUDT last year with about a 400% return, and of course, what, lo and behold, annualized 456% return since we've been tracking on C2, the latest third-party tracking. And of course, it's up 75% last month. So while Valerius was, I believe, down 8%, here you have a 75% gain in $7,500 just in September, off to a kind of a rough start so far, but very likely to make that back. 10% minus 15, up 75, and that's really what MSAUDT and a lot of our trading models are about, is about being there, when you've got to strike when the iron's hot, and it's not hot all the time. It's hot maybe 10-20% of the time. That's when you make 80-90% of your profits. And again, you see that, you kind of wait around, and then boom, $7,500 for a $10,000 account. We're at $6,000 gain over the last 3 months at 60%, and of course, again, annualized $456. And you can just trade this. You can trade this for just $288 a month. We've kind of switched back to a monthly platform, and $288 will get you six non-optimized, non-cover-fitted trading models that we've used and developed and improved over the last decade. And you're going to get returns about 400%, so it's pretty impressive, and what an awesome opportunity. If you have any questions about how to get started with that, you can trade it with full automation. You just all you have to do is have the account, and it sets up and run. You don't have to have your computer on. You don't have to monitor it. You don't have to do anything. It runs automatically. It has auto sync technology to make sure you're on the right side of the market. That's the third-party automation platform. You could trade it yourself. You can get signals via email. You can get signals via instant messenger to your cell phone. You can get trade alerts, and for $288 a month, you really can't beat it. $7,500 was the gain. You can go ahead and add to cart here, and we'll get you started on that. But we're going to look at a couple of the trading models. Go back to the market, MRSEM. In a long position, kind of reversed today off the 1,000 level. That's kind of look at that beautiful equity curve. That's going back since 06, 6 years, almost straight up. Pretty impressive. VIX equity per call, almost straight up, $120,000. Got a drawdown. Beautiful time. It's a free model. If you're interested, just let us know. What's interesting is we do have some extremes in sentiment. Looking at the contrarian sentiment picture, we get the sell-off that we mentioned. Here we're going to expect to get a sell-off. Here we're going to expect to get a sell-off in this extreme, and lo and behold, Beautiful selling opportunity early, as we saw surge today, given the complacency and higher prices. And that's what the smart money did. They sold. Again, you're going to get a bit of a sell-off, 2, 3, 4, 5 days, depends. And of course, complacency reigning supreme in the VIX model. And I'm going to go ahead and minimize that. And lo and behold, we see our 2K day trader 60. Beautiful equity curve over the last decade. The grind, beautiful equity curve over the last decade, getting stopped out of a long but switching back to the short side today. ESM30, these are our elite models. Green dot, as you can see, these continue to put up big gains. And of course, these are in Aurelius. And to some extent Valerius SRD, green dot. So all these putting up green dots, as you can see, are at least near their highs. These are elite trading models that we update you on a regular basis, and you can see in real time through the videos. MRC PTL getting hit with a nasty, that was painful. We really had to endure that, but you know, it's part of the game. When you're looking at an equity curve like this, you're going to get the little losses like that. EVR3 VSR, again, near its all-time high. R60F, that was the EMDS near its all-time high. EVR3 filter, EVR3 ACTSR, again, all near their all-time highs. And those, of course, are elite trading models. In fact, Valerius and Aurelius only trade a few of these dispersed in various weightings and so on and so forth. So if you'd like to find out how to get involved with full automation, you can also trade these models. You can trade Aurelius. Ask us how you can trade that without any fees. So wouldn't that be great? So for instance, Aurelius $1,500 a month, Valerius $400 a month, MSAUDT $288 a month. You can actually trade Aurelius, save that $1,500 fee, find out how right into admin at MiniAnalyst.com. And if you guys have any questions, we certainly hope you've enjoyed the update on the systems, update on the portfolios, update on the market analysis, and just update in general. Hope you've enjoyed it. And again, write to us or go to the website, chat with Support Team Live if you have any questions or concerned. And definitely, we'd love to have you and look forward to making you some money with these returns. I know you'll be a happy client. So again, write to us at admin@MiniAnalyst.com if you have any questions on how to get set up. And again, it's full automation, turnkey, and hands-free. And we will see you next time.